Welcome to the Deep Dive. Today we're digging into some fresh source material from SentinelOne. We're looking at their first quarter fiscal year 2026 earnings.
That's right. We've got the presentation PDF, the earnings call transcript, all the good stuff.
And our plan, our mission for this deep dive is really to unpack it all. Find the key financials, the strategy points, product news, what they're saying about the market, basically what really matters.
Exactly. Cut through the noise because
Yeah.
there's definitely a story here. You've got strong numbers in some areas, but also this, macro uncertainty everyone's feeling.
So not just straightforward good news.
Well, the performance looks pretty solid, and they're making big moves in AI security, which is exciting, plus a kind of interesting decision on capital allocation. But yeah, it's happening against that backdrop of, let's say, economic caution.
Okay, let's unpack this then. Starting right at the top, those Q1 headline numbers, what did they report?
All right, so revenue came in at $229 million,
Okay.
which is a 23% growth year over year. And they made a point of saying that beat their expectations.
Beating expectations, always good to hear. What about ARR, that core metric?
Yep, AR, annualized recurring revenue, that hit $948 million. So climbing 24% compared to last year.
Almost $1 billion run rate.
Getting close. And, they define ARR as the run rate of their subscription and consumption deals. They're always careful, though, to say, look, this isn't a forecast, right? Contracts renew, things change.
And a disclaimer, got it.
Yeah.
And margins, profitability, how'd that side look?
Pretty good, actually. Non-GAAP gross margin was strong at 79%.
Wow, 79%.
Yeah. And the non-GAAP operating margin, this is interesting, it came in at -2%, but that's actually a 4 percentage point improvement from last year. So moving in the right direction.
Closing that gap. And the bottom line, net income.
They hit positive non-GAAP net income again. That's the fourth quarter in a row.
Okay, so a consistent trend there.
Exactly. And free cash flow, non-GAAP, again, really stood out. A record 20% margin for the quarter. Their trailing 12-month FCF margin also ticked up by 5 percentage points.
Good to remember their timing, too. Fiscal year ends Jan 31st. So Q1 is February, March, April. Ended April 30th.
Precisely. And one more split, international revenue grew a bit faster, up 27%. It's now 38% of their total quarterly revenue.
Okay, so financially, Q1 looks, well, pretty solid overall. Let's get into how they're growing those business metrics, customers. What of the big customers? Are they landing more of those?
Yeah, they highlighted that. Customers with ARR over $100,000, that segment grew 22% year over year. They're now at 1,459 of those larger clients.
So definitely making inroads into bigger organizations.
Seems like it shows penetration and, demand for more strategic deployments.
And are those customers, once they're in, spending more? Expanding?
Yes, definitely. They said average deal size, or you could think of it as ARR per customer, expanded by double digits year over year. Hit a new record in Q1.
Which really speaks to that platform strategy, right? Selling more than just one thing.
Absolutely. It's not just endpoint anymore. And you see that reflected in their RPO, too, remaining performance obligations. Basically, contracted future revenue.
How did that look?
It actually reaccelerated, grew 33% to $1.2 billion.
Wow, 33%. That's a jump. What's behind that?
They said it's customers signing longer-term deals. Contract durations stretched out for both new and existing customers in Q1 compared to last year.
So more commitment. They're locking in for longer.
Yeah, suggests confidence, right? So it's success with large enterprises, still strong in the mid-market, and good expansion within the existing base. It all adds up.
Okay, that leads us perfectly into the strategy piece. The Singularity platform and this huge push on AI.
Yeah.
How are they framing their position now?
Well, they see themselves at the intersection of AI, cloud, data, and endpoint. They talk about this shift, moving away from, old school security.
Basic antivirus.
Yeah, signature-based stuff, very people-powered, didn't scale well. Or even the early cloud monitoring, which was maybe tech-assisted, but still needed lots of people and turned through data.
So where are they heading? What's the new model?
They call it the unified data platform. The idea is technology assisting people, using machines for context, for response, using automation, all to cut down that time it takes to react and recover, making the humans way more effective.
And AI is obviously central to that. They've been banging the AI drum for a while.
They have. They point back to being, quote, first to AML in the endpoint space, using behavioral AI, holding patents. They even mentioned being a Forbes 50 AI company back in 2020, trying to establish that history.
But purple AI, That feels like the really hot topic right now.
Oh, absolutely. Purple AI. They claim they were the first security company to launch a generative AI assistant for security analysts.
And is it getting traction?
Seems like it. The sources say triple-digit year-over-year growth in quarterly bookings for Purple AI. And get this, the attach rate was over 25% on subscriptions sold in Q1.
Meaning a quarter of the people buying other stuff also added Purple AI.
That's how I read it. Pretty impressive adoption. And they're not stopping there.
What's next?
They announced Athena. This is pitched as the next evolution and agentic AI platform.
Agentic, meaning it can act on its own.
Potentially, yeah. Not just suggest, but do. It's built on trillions of security events, tuned by their own MDR teams and partners. It includes auto-triage capabilities, which are generally available now, and it can hook into third-party data, too.
AI that can act and connect. That does sound powerful.
Mm-hmm.
What about automating other things, beyond just analysis?
That's where Singularity Hyperautomation fits in. It's also generally available now. Allows for building automated workflows without needing to code.
Okay, and cloud security. Big launch there in Q1 too, right?
Yep, the Unified Cloud Security Suite. Pulling together a bunch of cloud security functions, workload protection, CSPM, CDR, data security, identity, even AI posture management into one AI-powered solution.
Like a CNDPP, basically. Cloud Native Application Protection Platform.
Exactly. They gave an example of a Fortune 500 industrial company using it to replace point solutions and close security gaps in their cloud setup.
And data solutions, that seems like another growing area.
It is. It just crossed $100 million in ARR in Q1. That includes their AI SIEM offering.
SIEM security information and event management.
Right. They shared another case study, a Fortune 500 retailer struggling with multiple logging platforms, complexity, cost. Singularity, they argue, simplified all that.
And how do they compete against, the big established SIEM players?
Their pitch is being cloud native, AI embedded, offering real-time capabilities that legacy systems might struggle with due to latency. And a key point they stressed is being able to tap into a customer's existing SIEM data lake without forcing a huge migration project up front.
Ah, that could be appealing. Less rip and replace.
Could be. An endpoint, of course, it's still fundamental.
Still the core.
Yeah, the foundation. They gave an example there, two big Fortune 500 financial institution consolidating several vendors down onto their platform. Simpler, better performance, less overhead.
So wrapping up the strategy, it's really about unification, leveraging AI everywhere, and pushing way beyond just endpoint protection.
That's the vision. Simplify security, integrate data, use AI, protect everything, endpoint, cloud, identity, data. And it seems to be working, given that they said non-endpoint solutions are now roughly half their quarterly bookings.
Half their bookings are non-endpoint now. That's a significant shift.
It really shows that platform story is landing.
Okay, let's shift to the market itself, the opportunity, and what they're actually seeing in terms of demand. They painted a picture of a huge market, right?
Oh, yeah, massive. They're citing IDC and Forrester, looking at a total addressable market, or TAM, over $100 billion for 2025.
Wow. How does that break down?
Well, they slice it up. Cloud security at $12 data analytics $31 endpoint $17, this emerging generative AI security piece at $3, plus another $50 billion or so from areas like identity, exposure management, MDR, data protection, threat intel. It's a vast landscape.
Huge potential. But what about the current demand environment? What are they actually experiencing?
They said demand is still strong, still resilient overall, but, and this is the key caveat, that macro uncertainty really picked up in April, towards the end of their quarter.
Ah, okay. And what effect did that have?
It led to longer sales cycles. Some customers apparently hit pause on spending decisions right then. It mainly impacted their net new ARR for the quarter.
So deals got delayed, pushed out.
Exactly. They were very clear on the call. These were slipped deals, not lost deals or canceled projects. They said their competitive win rates held up strongly.
Okay, so demand is there, but closing takes longer. Deals need more scrutiny, maybe.
That seems to be the picture. And because of that Q1 experience, they said they're taking a, quote, more measured approach to their full-year growth forecasts.
Makes sense. Do they see any improvement after April?
They did mention that trends improved in May after Q1 closed. More progression, particularly in the enterprise and federal pipelines.
Let's talk about how they reached that market go-to-market. Any changes there?
It's an ongoing evolution, really, continuing that shift from selling point products to selling the integrated platform, making it easier for customers to adopt more pieces of Singularity, more flexible consumption.
And partners must be critical for that reason.
Absolutely crucial. They actually launched a revamped partner program called PartnerOne.
Okay, what's that about?
It's aimed at their whole ecosystem: MSSPs, incident responders, VARs, tech partners. The goal is a streamlined structure, better incentives, more resources, all designed to help partners reach more customers and, solidify their role.
They also seemed pretty excited about their public sector progress, especially FedRAMP.
Yeah, that's a really big deal for them, particularly in the U.S. government space. They already had FedRAMP High for Endpoint and their AI SIM,
Right.
but now they've achieved FedRAMP High for Purple AI, their CNAPP cloud security, and hyperautomation across the platform.
So covering more of the platform at that high security level.
Exactly. And they specifically called out Purple AI as the first and only agentic AI security solution with that FedRAMP High approval. That's a major differentiator for selling into sensitive government agencies.
How's the federal market overall, though? Any headwinds there, too?
They acknowledged some near-term uncertainty around budgets, how money gets allocated, so deal timelines might fluctuate. But they stress the overall federal pipeline remains strong.
Yeah, proof points.
Yeah, they mentioned closing a 7-figure renewal and expansion deal with a large federal agency just after Q1 ended, so early in Q2.
Oh.
Shows big deals are still getting done. They're working across federal, state, and local.
They also rattled off quite a few industry awards and recognitions. That always helps build credibility.
It does. Third-party validation matters. They mentioned Frost & Sullivan naming them top for growth and innovation in endpoint security for 2025.
Okay.
Picked up SC Media Awards for both Best Endpoint and Best Cloud Security, and got recognized in Gartner Peer Insights Voice of the Customer for CNAPP.
What did the customers say there?
A 98% willingness to recommend rating from the user reviews submitted to Gartner. That's a pretty compelling feedback.
Yeah, 98% is very high. Okay, let's switch to the financial management side. Operational discipline, cash. What was the story there?
Big focus on efficiency. That's driving the margin improvements and the strong free cash flow we talked about. They actually said their own internal investments in AI and automation are helping them become more efficient too.
Eating their own dog food, so to speak.
Sort of, yeah. They mentioned making strategic decisions, realigning teams, enforcing discipline, focusing investments, optimizing real estate, things like that, all aimed at setting up stronger margin gains in the second half of the fiscal year while still funding growth areas.
So it's that balancing act. Invest for the future, but also deliver on profitability now.
Exactly. They called it a thoughtful balance between long-term growth and a, strong, responsible financial profile.
And they certainly have the cash to manage that balance. What was the cash position?
Strong. Cash equivalents and investments grew to $1.2 billion at the end of Q1.
$1.2 billion.
Okay. And that led to a pretty significant announcement on the capital allocation front.
What was that?
They authorized a $200 million share repurchase program, open-ended.
A buyback. Interesting.
Sure.
Why now? What was their reasoning?
Well, they gave a few reasons. Shows confidence in their long-term prospects, a belief that maybe their stock price doesn't fully reflect the company's value and potential right now.
Okay.
It gives them flexibility to act opportunistically, maybe reduce share dilution over time, return some value to shareholders, all while keeping a strong balance sheet.
Does this mean they won't do M&A acquisitions?
They specifically said no, it doesn't prevent M&A. They still have the capacity and willingness to do deals if the right strategic opportunity comes along. The buyback adds another tool to their belt.
Okay, last piece, the outlook. What are they guiding for Q2 and the full year, given everything we've discussed?
All right, for Q2, the current quarter, they're guiding revenue to around $242 million. That's about 22% year-over-year growth.
And margins?
They expect operating margin to hit break-even in Q2. That implies roughly another 300 basis points of improvement year over year. And they also specifically guided for sequential net new ARR growth to be better than typical Q2 seasonality.
Okay, so expecting a decent bounce back in new business growth in Q2. What about the full year, FY26?
For the full year, revenue guidance is now $996 million to $1.01 billion.
Just shy of $1 billion to just over.
Right. The midpoint implies about 22% growth for the year. Now, they did trim this guide slightly by about 1% at the midpoint, reflecting those Q1 headwinds we talked about.
Acknowledging the macro impact. Makes sense. full-year margins?
Non-GAAP gross margin expected between 78.5% and 79.5%, and non-GAAP operating margin is guided to be positive 3% to 4% for the full year.
Positive operating margin for the year, that's a big step.
It is. That's an improvement of over 650 basis points compared to last fiscal year, FY25 at the midpoint. Big focus on profitability.
And free cash flow for the year, still strong.
Yeah, they expect free cash flow margin to, again, exceed the operating margin for the full year, probably by several percentage points. So cash generation remains a key strength.
So they adjusted the top line slightly, but are showing significant leverage and profitability improvement in the full-year outlook.
Exactly. They acknowledge the outlook reflects Q1 and the ongoing macro uncertainty, but they sound confident because of new solution uptake, platform deals, their AI leadership, and competitive strength.
Okay, so if we boil down this deep dive, SentinelOne put up solid Q1 numbers, maybe slightly tempered by macro issues late in the quarter, but they're showing real progress on the platform strategy, especially with AI like Athena and the Cloud Suite getting traction. And financially, they're managing tightly, improving margins significantly, and even initiating a buyback, all while navigating these choppy economic waters.
That sums it up pretty well. The story is really about that execution on the platform vision, the clear leadership push in AI security, tapping into that huge market opportunity beyond just endpoint, and doing it with increasing financial discipline and profitability.
It definitely leaves you thinking. As we wrap this up, maybe something for you, the listener, to consider. With AI becoming so deeply integrated into security, especially this agentic AI that can potentially act on its own, how might that fundamentally change what security teams actually do day to day? What kind of new skills might be needed? And how does that balance shift between relying on human expertise versus machine speed and autonomy? Definitely something to watch as this technology evolves.